All right, welcome to the Explainer. Today we're doing something really interesting. We're going to follow the money. We're going to track where some of the world's most sophisticated investors are putting their cash. And let me tell you, the signals they're sending, they're pretty hard to ignore. So, the source material we're diving into today kicks off with a pretty bold statement. It basically says that traditional economics, yeah, it's obsolete. The argument is that the whole system is creaking under the weight of a massive global debt crisis, and this is forcing the smart money to run for cover. So, let's start our investigation right there. Okay, so what's really pushing this hunt for a safe place to park cash? Well, according to our source, it all boils down to one single massive problem. Our global financial system is stretched to its absolute breaking point. And this is the key part. The source says this isn't some far-off theoretical problem. Nope, this is our reality right here, right now. The entire financial machine is being kept alive by these constant cash injections from central banks. And, the smart money, they see this. They know a system that needs constant life support isn't exactly stable. Which brings us to our very first clue in this whole mystery. And it's a classic one, probably the most traditional, time-tested safe haven you can think of. Now, the answer to this question, wow, it really pulls back the curtain on just how seriously the people on the absolute inside of the financial system are taking all of this. Get this number in your head, 220 metric tons. That's not a typo. That's how much gold central banks scooped up in just the third quarter of last year alone. That's a 10% jump from the year before. We're talking about a huge institutional stampede into physical gold. So let's just let that sink in for a second. The very institutions that are supposed to be the stewards of the financial system, the ones running the show, they are hedging against the system they manage. I mean, when the ultimate insiders start buying up an insurance policy like gold, that's a signal you really have to pay attention to. All right, time to move on to our next clue. And honestly, this one's a bit of a curveball. It's a really surprising link between the old world of finance and the brand new digital frontier. The idea behind Tether is pretty simple, right? You give them a real US dollar, and they give you a digital token that's supposed to be worth a dollar. But here's the thing. With a market cap of over $100 billion, the real question becomes, what in the world are they doing with all that actual cash they're holding? Okay, so no big surprise here. The lion's share, about 76%, is parked in super safe US Treasury bills. But it's that other 24% where things get really interesting, because it's not just sitting in cash. You see a pretty big slice, 5.6%, going into Bitcoin. But wait, there's another, even more traditional asset hiding in their portfolio. And here's the twist. You ready for this? In just the last quarter, Tether bought 2% of all the gold traded on the entire planet. They're even investing directly in gold mining companies just to make sure they have a steady supply. Think about that. A giant of the digital world is gobbling up one of the oldest, most physical assets in history. This is just amazing, isn't it? It perfectly shows this convergence of strategies. You've got the old money central banks on one side and the new money crypto giants on the other, and they are both running to the exact same physical asset for safety. It's just a massive validation of gold's role as a safe haven when things get shaky. Okay, let's shift gears for our final clue. This one isn't so much about protecting wealth from the problems of the past, it's about making a big bet on the critical demands of the future. So what we're looking at here, according to the source, is a huge structural imbalance in the copper market. On the one hand, you've got demand just exploding. Think about all the AI data centers, all the electric vehicles, the entire green energy transition. But on the other hand, the supply? It's super fragile. It's concentrated in just a couple of politically tricky places, and it's always facing disruptions. The source describes it as a compressing spring, just getting tighter and tighter, waiting to pop. And to give you a sense of just how crazy that demand is, 45,000 tons. That's the minimum amount of copper you need to build just one big AI data center. Now, think about the hundreds of these things being planned all over the world. The numbers are just staggering. And this brings us to the source's pretty bold prediction. The conclusion of this analysis is that the price of copper could actually double. The thinking is that if this demand keeps outrunning the tight supply into 2026, a major price surge isn't just a possibility, it's pretty darn likely. So, at the end of the day, the source argues that these big financial moves don't just happen in a vacuum, right? It suggests that if you really want to understand where the world is headed, you have to look beyond just the markets. You have to look at how nations themselves are acting. And that brings us to one final geopolitical observation. Now, to wrap things up, the source ends its analysis with an observation about national priorities. It presents the following data about aid to Ukraine, and it really just leaves it for the audience to consider on its own terms. So, what you're seeing here is a table, and it's based directly on a chart from the source material. It just shows the financial aid given to Ukraine as a percentage of the gross domestic product for different EU countries. And you can see it highlights how Spain and Italy provided a very low level of aid when you compare it to the size of their economies. Now, the source puts this low level of aid next to two other interesting facts. One, that both of these nations have gotten major EU bailouts in the past, and two, that both of them were still buying large amounts of energy from Russia. Again, the analysis isn't making a judgment here. It's just presenting this as one last data point, maybe on how nations, just like investors, might be prioritizing their own economic stability when times get tough. So, after all that, what's the big takeaway? Well, from central banks hoarding physical gold, to crypto giants buying that very same gold, to these huge bets on industrial metals like copper, the signals seem pretty clear, don't they? The world's financial insiders are actively moving into hard assets. They seem to be preparing for a future that looks a whole lot different from the past. And that, well, that leaves all of us with a pretty critical question to think about. Thanks for joining this explainer.